Well, a guest editor today is Mr. Puneet Chhatwal, and before I go to him, I just want to put this one simple chart of Indian hotels out on the screen. Whichever way you want to look at it, 1 month, 3 months, how much we should look at? 1 month, 3 months, 3 years?
Yeah,
I think
at
3
least
years
5
would be.
years, 3 years, 5 years.
5 years.
Because it will have also that COVID
It
impact. and all of
captures the
that.
entire thing.
Yeah.
Okay, let's look at the date you took over.
6th November 2017.
Okay, November 2017.
7 years.
Let's look at November 2017, and our producer is going to just fire what really could be called as the new era of Indian hotels in terms of change of leadership. And from 2017, from 60 rupees, the world was normal. See folks, when Mr. Chhatwal took over, the world was normal. Then came the COVID crack, the stock plummeted. It was existential crisis for the global hospitality industry, and from there, it has actually become a case study. It's a case study in Harvard, the turnaround in Indian hotels. And it's a business which I say has survived, revived because of leadership, the tailwinds which are there in the sector, the ability of the Tata Group and the top leadership of Indian Hotel to really think differently. And more than Harvard, it is hard work, right?
Hard work.
Yeah, there is no substitute for hard work, Nikunj. But as you rightly said, if you have the support of as wonderful a group as Tata Group is, and the leadership at board level, leadership at management level, and down till your last connect from the dishwasher in the hotel to all the associates, which has gone up from almost 25,000 to 40,000 today. So almost 15,000 new jobs have been created just with us. I think it's been a nice innings despite a very big blow of 6 quarters during COVID.
It never bothered you that time, then 6 quarters, there was virtually no business, right? I mean, forget about margins, revenue, there was no business. How did you deal with that?
The good thing was that we kept doing innovation. We created mind space for new businesses, like we did the homestays with Ama. We started home delivery with Cumin. We started hospitality at home. We were doing meals to smile, providing meals to all the frontline workers in all the government hospitals in Mumbai, some in Delhi, some in Bangalore, even in Coimbatore. We hosted more than 120,000 bed nights for the frontline workers. We call it bed nights because they're coming from hospitals. We started using Taj Public Service Welfare Trust, which was formed in the aftermath of 26/11. We reactivated that. We were raising funds in it to support all these activities. So there was no idle moment. The only lowest point that I experienced during this COVID period was the fear that was inculcated in all our customers' minds, in the minds of humanity, that if you go to a hotel or if you go to a restaurant, the likelihood that you get a COVID is very high. Mm-hmm. Now, how to fight that psychological fear, that was a big challenge. So we came up the entire sector came up with those protocols, how to smile behind a mask. So I think it's a very different kind of a journey, and I think that was possibly the lowest point, how to keep the show on when everything works against you. Your revenue is zero, you're not allowed to open, you are looking after all your staff, you're looking after the frontline workers, and you don't know when things will open up.
A typical management playbook would be how to deal with slowdown, how to bring in operational efficiency, how to make customers more happy. But how do you deal with a situation like COVID? Because there is no playbook for it. This situation never existed. So at a management level, how did you deal with it?
Well, one thing which I think in hindsight we did very well was, as management, we got together every day digitally. So the top management met every day. The top 50 met every Tuesday and Thursday. And every Tuesday and Thursday we had a guest speaker either from within the group or from outside the group. and covering all areas. It included, like a famous Bollywood personality, to group head of HR, to the chairman of Tata Sons, who's also chairman of Indian Hotels. So we had a diverse range of expertise talking to us and helping us, look at things the way we should and not look at it only through the lens of COVID.
And you have managed to turn around that threat into an opportunity for yourself, given the kind of innovations that you have done. But let's talk about the present. We have talked about the past. In terms of the situation right now, how's the overall demand trend, or the way people are consuming luxury, consuming this travel has changed over the course of last 3 to 4 years?
Well, I kind of, although you have asked the question, but a lot of times in this discussion, I tend to agree with Nikunj that the sector is transitioning slowly yet steadily into a consumption sector. This is not a discretionary sector anymore. As India grows, India's GDP grows, India's economy grows, you become fifth largest, third largest, 30 trillion, 40 trillion. The likelihood that this sector grows is close to 100%. It's not 80%, 90%, 95%. And travel and tourism will not just be leisure. It's a basic fundamental business need that needs to be satisfied at all touch points. It's not just at luxury level, whether it's upscale, upper upscale, mid-scale, budget. So I think depending on the level of the executives traveling, and also as it moves towards consumption sector, there will be more and more consumption of leisure. And the terms that were coined, bleisure, which became bizcation, are actually coming into practice now.
Right. So Puneet, are you saying that there's a structural shift in the way hotels and hospitality is being seen or being absorbed by consumers? Earlier it was a cyclical space on the side, but now it's a more structural and mainstay sector of the economy.
Absolutely. That whole dependence on, October to March is gone. People want to be, or companies want to be profitable even in Q1 and Q2. That's at least what is evident when companies announce results. India is no more like 6-month destination. It is being promoted, actually as we speak, by the tourism ministry, as it's also a great summer destination because there are places to go to. It has the highest level, among the highest level of mountain ranges in India. So there is tourism opportunity on the mountain ranges. It has so many beaches which are still unexplored. It has highest sea mass available in Southeast Asia. And not to forget the opportunity on medical and spiritual tourism. Which is gaining more and more importance as the amount of Indian diaspora keeps increasing, especially outside of India, where families want to bring their children and make them experience the spirituality, the culture, where they are coming from. So I think all in all, India is very well poised to benefit from all these three great opportunities coming. And also, if you look at the MICE, there was no Jio, there was no Yashobhumi, there was no Bharat Mandapam. Imagine if there are two events happening at the same time in Yashobhumi and Bharat Mandapam. I don't think there will be a room available till Agra.
You have experienced this firsthand because you've seen some of the events happen.
But this quarter, heat, elections, could there be a cyclicality at play in this quarter?
Absolutely, there would be some kind of headwinds in expectations.
Okay.
But will we be at par with what we did last year? I think we should be able to manage, because that's what COVID taught us. COVID taught us how to create revenue, and COVID taught us how to control costs. So ultimately, it should be fine, and especially we are a bit blessed because we have a very strong not like for like growth. We opened 20 hotels last year plus 14 which we took on a distribution platform on the Tree of Life brand. But this year again we are poised to open a minimum of 25 hotels, which means more than 2 hotels a month. And most of this growth is what we call capital light. So it all will keep adding, and that should keep helping our margins, our absolute amount of profitability, as well as the top line.
In intrigued to know, is the bulk of the travel actually domestic of late or international as well? Because of course the Prime Minister and a lot of leaders have been talking about, see what's there in your own country as well. What's been your assessment?
I think in the last 2 years, firstly at a global level, travel has become more domestic because of that fear of COVID, which I just now spoke about. The different waves kept coming, whether they were strong enough or not. The second is as airlines came to a halt in the number of sectors they were flying to and the frequency that they were flying, the prices of international travel, went through the roof. So I think as things are beginning to normalize, this global travel will also start coming back. And as of this October, we should see us getting close to the pre-COVID level. And it's only next year that India will cross the international arrival numbers that it had prior to COVID.
So are you factoring that in your FY25 assessments, that world will normalize and foreign travel will come back, and that is something which could account for the surprise in earnings?
We are. I mean, I think we didn't go till the level of earnings, but if that happens, obviously it will have an impact on the earnings. Also, we should not forget this is a very big election year around the world. Yeah. So there is, it's not just India, but if you look at US, we look at UK, a lot is happening. So I think next year will be a more normal situation. Until then, we are very blessed to have such a strong domestic market in India that is giving us the right kind of tailwinds to keep doing better and better as we have done for the last 8 consecutive quarters.
Puneet, in fact, I wanted to come on that one. Your focus on earnings is pretty visible in the numbers, but this entire experiment of capital light, this arrangements with asset owners, but the management and the standards will be of Taj, Taj standards. How has that yielded in terms, not only in terms of your returns, of course, have improved, the return ratios metrics, but also customer feedback?
If I may be allowed for just a minute to just kind of, applaud our own strategy. We communicated a balanced portfolio of 50-50. Because in order to be the most iconic, the kind of assets, especially the Taj brand has, is just very unique in the world. That is what made Taj the strongest brand across all sectors in India, or even world's strongest hotel brand for the last 3 years, of which twice we were number 1 and once number 4. And the jury will be out very soon in the next 3-4 weeks on what happens in this year. But having said that, those assets in those kind of unique spaces, if managed efficiently, will help you with the operating leverage, and the capital light part will help you grow the margin. So we are trying to get the sweet spot of both. Now that coupled with the multiple brands that we have or we have launched, so even if, let's say at a Ginger level, we sign an operating lease, but it's really a variable cost model. So whether you are capital heavy or capital light in a Ginger, it doesn't matter. Important is not to go on the Indian subcontinent just for a franchise kind of business, for a company like us, because that will not move the needle. So if your Taj Mahal Palace and Tower in Colaba did a revenue of 700 crores last year, how many Ginger hotels will you need to get to 700 crores? But you need the Ginger to satisfy the customer at that price point. And also look at the opportunity of Ginger in 10 years from now.
When the volumes become
you could do 500, 1,000 hotels. And it's just, if you look at UK, other top 5 economies, top 10 economies of the world, these kind of brands are thriving out there. Our focus will remain Taj,
yes, of course.
but that does not mean that the other brands cannot coexist and cannot help us improve our financials.
So I'll chart the journey of Indian hotels from 2020. COVID happened, 6 quarters of no business. You took a brave call as the board, and the team took a brave call of expanding, not contracting. You expanding while others were not in business. You incubated a lot of new platforms, Ama Trail, you uplifted Chambers, the experience, then you worked on even Cumin. Every year something new keeps on getting added up when it comes to your portfolio. In next 3 years, what are the additional levers which you would add which will ensure that A, there is linear growth, B, there is growth which will come from, let's say, foreign tourism and other, spiritual aspects. But what are the new platforms which you will add? Because you've gone on record and you've said that new businesses now account for almost 1/3 of the total revenue. That is something which did not exist. What is the new you will keep on adding?
Well, Nikunj, let me start with an example. In less than 6 months ago, we opened the Ginger Santa Cruz, which we call Ginger Mumbai Airport. It's going to have a phenomenal year. Despite the heat, despite the elections, we are running since opening at an occupancy of almost close to 90%. And this property is going to do a margin of 60%. So a huge success. As we speak, tomorrow is the groundbreaking of 775 rooms by Bangalore International Airport of a combo hotel, 450 rooms Vivanta and 325 rooms Ginger in that airport premises, where we have more than double the size of the existing Taj at the airport, taking us close to 1,200 rooms. And as we speak, we have also very recently, a month or 6 weeks ago, entered into a contractual arrangement to build at Mopa Airport another 300 rooms Ginger. As of 1st of August, what we have announced, we are launching the reimagined Gateway brand with almost 10 hotels in the month of August. So some of them are existing, some are new, and that gives us another platform to help expedite the growth. With our long-standing partners like Mr. Neotia,
He will be joining us in a while.
Who will be joining us in a while. I think we would end up having almost 20 hotels in a partnership which started in operation maybe less than 3 years ago. With our Chaudhary Group in Nepal, which started 25 years ago, we said we'll celebrate 25 years with 25 hotels having 2,500 rooms. So I think all in all, it's your partners that help you grow. These are various levers that help you grow. The various attributes that each brand brings at a different price point. And not to forget, something which has come as a big surprise to all is the 60% market share of Taj Sats in flight kitchen business. So what was considered as the black sheep 20 years ago, 15 years ago, today is more than 1,000 crore business. Yeah, and
Black
adding
sheep has
more than
become
25% in margin. In flight kitchen business, 25% margin is unheard of. And it's venturing into non-airline business also. So the idea is 20 to 30% of TajSAT's business should not be aviation driven only.
Okay.
So it could be catering, which will leverage the Cumin brand in terms of providing that service in large business houses which have 3, 4, 5,000 people to feed for lunch or high teas in a day.
So understand the setup, sweat the assets a bit more, look at what you have and find out innovative ways how you can actually just add more muscle to the current setup. Well, Yezdi also joins us now, so nice to have you. Finally, we convinced you to come to our studio.
Thank you.
As anchors, we are habitual to ask questions. Mr. Chhatwal is habitual to answer questions. Let's change the role today. He's the guest editor, so why don't you ask the first question?
I still have to answer it.
Yeah, I think Yezdi, you have been looking at the sector in general, but also at Indian hotels in particular. What do you see, based on the learnings that you have had, how the sector is impacted? I'm not necessarily going to push you to speak about Indian hotels, but how do you see this sector? And now, in your role as the CEO of KPMG, you're more in the air than on the ground, traveling the world. What do you see in terms of standards, in terms of how hospitality is on the Indian subcontinent versus the rest of the world? How pricing is versus the rest of the world?
So, thank you, Puneet. Thanks, Nikunj. I'll actually first talk about the hospitality sector, where it was once upon a time. And one of our toll gates is actually COVID. And we entered into COVID, and we know what happened in COVID to that sector. As we came out of COVID, there's been a tremendous resurgence, especially in the hospitality sector. And the right players have made the right moves in terms of adaptability and catering to the demand. So you are seeing a reflection of that across the nation. But you will always have a mismatch between demand and supply. And it's largely because the hospitality sector is interdependent on other aspects like infrastructure, like hygiene, like safety, and those aspects. So the entire ecosystem actually has to fall into play to make it comparable with developed places.
But the demand supply mismatch that you're talking about, yes, right now demand is outpacing supply, but the kind of announcements that we have been reading of late and what everybody has been announcing, you have a target of 2 hotels a month. Do you envisage at some point of time the supply might become more than the demand and there could be a glut then?
I don't think so. Not
So demand will continue outpacing supply, you believe?
I believe so, yeah. At least for the next decade, I would think.
Next decade.
Yeah.
But which segment do you think? Is it going to be just affordable, travel and the business travel that he was talking about? Is it more towards luxury? Which end do you think in hospitality is likely to gain more traction?
So luxury will stay, and Puneet is the right person to answer that. But I would think as we have a burgeoning middle class, it's also non-luxury, it's also wellness and those kind of hotels and hospitality, plus of course tourism. So as we get more attractive, we gain better respect globally. One would expect tourism to go up. You also have to consider that India is the anchor for sports like cricket. And it was the anchor for G20 and those kind of events. Perhaps in the next 2 decades, we'll host the Olympics. You don't know.
We are preparing for that. Yezdi, let me put it this way. Where in the cycle of hospitality sector are we right now? We are almost 4th or 5th year where the curve has been very steep, I would say. And that is why the speed of capacity addition has gained, pace, leaders and others as well. Where are we in the cycle? Or the cycle has got prolonged as well, in your view?
I would actually say the cycle is shortening
Okay.
more than prolonging.
Okay.
Explain that.
Things are moving far faster than you think.
Okay.
So with technology, you have to again stay adaptable. So if you start comparing things to the conventional way of hospitality, it's no longer going to last in the next few years. Whether it's simple things like contactless check-in or maybe an AI-driven personalization. So those aspects are going to actually shorten the cycle for you in terms of your...
What I meant was that where are we in the cycle of growth right now? You see it go on 5-7 years, the earnings growth, the demand growth, all of that.
For the next decade, I would think so.
Okay.
So
Early cycle.
I'll underline that word because you've spoken about the decade for twice in this answer, in this communication, this interview. So I'll keep that piece in the center that Yezdi feels that the hospitality demand for next decade, which is 10 years, will remain strong.
I agree because as I mentioned earlier, it's the
So 10 years is a lot of time.
There will be the usual short-term dips or headwinds that will come for reasons that we don't know today. Something will keep happening in the world, whether it's a geopolitical in nature or it's maybe a smaller form of health scare. I would never want to take the word pandemic again in my mouth. So something will keep happening. But is it fundamentally a strong business? The answer is yes. Okay. Has it shown as a sector grit and resilience? The answer is yes. And my favorite quote is, it's like a plastic ball. You can push it underwater, but the moment you release it, comes back up. So, and that's how I would like to describe tourism sector. Is the wanderlust of people, whether on business or on leisure, is going to stay. And actually it's going to keep getting stronger and stronger and stronger as the society will benefit from more and more per capita income and more disposable income.
I was thinking of an analogy, and when you say plastic ball, I just thought through it that how would I like to describe Indian hotel? Like a bow and arrow. I'll tell you why. With a bow and arrow, you have to push it back. But the more you push it back, the more inertia it will create. I think that's what Indian hotels has done, right? The more it's got pushed back, seriously, on debt, on COVID, on every front, they've been pushed back and they've just come back. The more you push them back, the more they come back with. And I think that's the value credit. Before I invite Mr. Neotia, I want to put some numbers here. And KPMG CEO will never speak anything without numbers, right? So when you say that you're confident of a decadal growth for the sector, what growth are you assuming? Where do you think the demand supply is going to move? How many hotel rooms broadly will get added? How much would demand be? Just give us a sense of that.
So at a high level, I would expect between 17 to 20% as a
demand,
as a CAGR.
Okay, is that a reasonable number?
See, I would love to believe what Yezdi is saying, but if the CAGR on demand is double digit, even if it's 12 or anything up north of 10, it is amazing for the sector for 10 years.
Okay.
I don't think any of the tourism gurus have predicted that. So maybe I will take cue from Yezdi and try to highlight this number because that would be phenomenal.
Okay, so headline, I have to do my day job also of being the chief editor here. So headline number one for us, and I want to thank the guest editor for giving me this headline here, which is headline number one is that the tourism sector in India or the hospitality sector in India has potential to grow in double digit for next 10 years. Rule of 72. If the sector grows in double digit, it doubles in every 3 years. That is the kind of growth we are looking at in terms of demand. Your number is 15 to 18, 17 to 18%. You're slightly more conservative. Now, before we go to Mr. Neotia, I'm coming right to you, sir, because this discussion has got all of us excited in the studio. What about supply? At what rate do you think that will increase for the industry?
The supply rate is going to be maybe high single digits, like 7-8%, and that is what has changed the dynamics. So firstly, not much supply got added in COVID period, and so there is a lag out there of 2-3 years while demand kept moving up. And it does take 3 years at a minimum to build a nice property in India with all the planning permission, construction, finishing, etc. Now this can get shortened if there were certain changes, because on the Western Hemisphere you can build specially hotels in mid-scale and lower in a period of maximum a year. And if we were to translate it into India, let's say it could be done in 16-18 months, then that could go faster. But even that would not be difficult situation for the sector to manage, because a lot of this growth will come in new cities, which we call tier 2, tier 3, or destinations which are just spiritual in nature, which you cannot classify as a tier 2, tier 3 city. So I think all in all, that taking that old way of saying that so many rooms are coming, no.
Not the right thing.
Yeah. So many rooms are coming. How many are in metros and how many are in non-metros? I think that's the key to look at numbers.
Quick word I want to understand, when a hotel or property comes up, which part actually takes most of the time? Is it the permissions? Is it the design stage? Is it actually the construction part? Where do you see the scope of cutting down on time?
You know, there is a scope of cutting down on time at every point. We have our famous C-Rock thing going on, and it just goes on and on. I think in that one, to build will take like 1/3 of the time to get everything in place. But Ginger, Mumbai airport, we had COVID, we had everything. It would have got built otherwise in less than 3 years. We are doing a combo hotel which will finish in less than 12 months in Kevadia, which is Ekta Nagar, where we have the Statue of Unity, a Vivanta and a Ginger. And there we are very optimistic that the total construction time would be less than 24 months, thanks to Tata Projects. So they're doing a great job there.
So exciting times. I mean, if I summarize and move to Mr. Neotia, that both Puneet and Yezdi, they feel that the industry demand will grow in double digit for next 10 years. The supply as of now, a little bit of innovation here or there, but is not going to be in double digit. So the gap will continue. Rates will grow in line with GDP, which is 7 to 8%. So next 5 years, the rates will go higher in line with GDP. Demand will grow in double digit, and supply is going to be in single digit. Perfect time for me to welcome Mr. Harsh Neotia, Chairman of Chairman Ambuja Neotia Group, and they have a tie-up now with Indian Hotels. And It's tree of life, very different kind of a tourism experience. So I will just lean it to you to take the conversation forward. What is this tie-up and how is this different for Taj and for the Neotia Group?
Well, with Mr. Neotia, firstly, good morning. It's always interesting to talk, not just hotels. I think from all our partners, if somebody understands culture, understands society, understands human needs, it's him. So I would rather like to start by saying, how did he think of such unusual, beautiful projects, and that too as a Taj in Gangtok, which we recently opened, the Taj Guras Kutir. 2 years ago, we opened Taj Chia Kutir in Kurseong. And the next one, which is coming up, Taj Tal Kutir, also very recently opened. In the next few months, opening Patna. How does he get to this kind of a bouquet of projects? And what is the thinking that goes in his mind from an investor and a development point of view?
Well, thank you, Puneet. Thank you, ET Now. All I'd like to say is that I have, been just like anyone else in India, traveled quite a lot in the region where I live, which is around Calcutta. And I found that we have this amazing beauty, amazing culture, amazing biodiversity all around us, but we don't have enough hotels to cater to the luxury segment. And there were three reasons that I realized that. One is that whether the chicken comes before the egg, somebody has to take that call. The second is the infrastructure in most parts of our country was challenging till recently, and therefore getting to these remote places was a big difficulty. And third was that most of the luxury hotels were not willing to go into the boutique segment. And, many of these places couldn't afford to have a 200-room hotel. So these were the three challenges. I set off buying lands in these remote locations, which I thought were just amazingly beautiful. And I hoped that I'll find some partner who will come and manage it for us, since we obviously didn't have the bandwidth to do luxury management. And that's luckily how I managed to get Taj. Of course, I must tell here that Taj, at that time, were not signing any hotels which were less than 100 or 125 rooms. And we were actually building it around 40 rooms each. But then at their request, we increased it to 70 rooms as a midway compromise, so that we could still retain the luxury and the expanse and yet have it somewhat more amenable to the Taj requirements. But the good news is that they came on board, and now, of course, we have a great partnership. And we are hoping that we will do many more projects together, maybe even some smaller than this, but extremely luxurious. So my starting point was very simple. We need to explore the different geographies of our country. And in fact, COVID, in a funny way, which became a big problem, also became an inflection point for Indians to discover travel within the country. I think because of all restrictions on travel and airline movements, etc., Indians started looking at India for their luxury travel. And that suddenly opened up many of these places to exploration. And now, of course, I think for most of us in India, we feel that for short holidays, it is best to go to some of these places in India rather than to go overseas. So that's a major change that I think has been noticed post-COVID. And the other thing, of course, is the standards of service in India for luxury is way above any standard of service that you can get in any Western hotel. I mean, I'm not talking about some of the Southeastern nations. They do provide extremely outstanding service. But Western countries, particularly post-COVID, service standards have really been a challenge because of staffing issues, etc. Whereas India and Indians like a certain amount of fuss in the service, and we are able to do that. So I think increasingly the attraction or the attractiveness of traveling within India for luxury will only grow exponentially.
In fact, we also have Make My Trip also coming in this discussion. But Mr. Neotia, one quick word. You were quite ahead of time in realizing the luxury potential of the the smaller places, the far away places, up till some decades back, luxury as a facility in hospitality was only, the thing of metros of the big cities. But now, of course, Taj Group is also taking major leaps to cater to every nook and corner, the luxury requirements. I'll come to Puneet on that one. But how did you, in the Northeast, many years back, decades back, you had started taking these parcels of places not heard of, at least in this part of the country. Do you see that happen in other smaller parts of the country as well, where natural beauty is high and people are going back to biodiversity?
So there is a challenge in terms of finding these properties and getting all the permissions and clearances, because in many of these places there is no proper system even to give clearance. In fact, some of our projects have taken upward of 5 to 6 years just to get clearances, because the local administration didn't have any clue how to give you that building permission, etc. And for a corporate body like us or a partner like Taj, we need to have all permissions in hand to be, compliant from our corporate governance point of view. So that was a challenge, but I think that's fast changing. People have realized the potential of tourism, and therefore governments have become more proactive. And I think this curve is definitely going to get shortened as we go forward. But yes, finding these locations will continue to remain tricky. But India is just so full of it. I mean, we get so many proposals from so many places. I really wish I had more money to do them all together. I'm really excited about the possibilities of building up remote parts of India, which are absolutely amazing in terms of their aesthetic beauty and the sheer. I think the way we can experience our country, it's really magical.
Absolutely, the potential is quite a bit there, and yeah, I think there's enough to explore as far as our own country goes. But let me toss that question to Rajesh as well. He's of course joining us from Make My Trip. Rajesh, hi, good to be speaking with you. Talk to us about what are the recent travel trends you are, witnessing on the ground. Whether it's about international travel, whether it's about people traveling domestically, and what kind of travel is it? More of business? Is it more of the family travel around vacations? Tell us what you're witnessing on the ground right now, Rajesh.
Sure. Good morning, everyone. So before I talk about the trends, I'll tell you, and there's right now good times, after recovering from COVID, which was a terrible time for the industry. I just wanted to very quickly touch upon some of the fundamental macro economy drivers, which is sort of driving this experience consumption story, if you will. Because travel is right up there as part of the, from a consumer point of view when it comes to experience. What we have seen, what is sort of driving this is, of course, rising income at the, sort of middle class and the upper middle class and the high net worth individuals sort of cohort, if you will. While today we will have, let's say, about 50 million households, which will have more than $10,000 annual income, we are going to add another 50 million households by 2030. We are going to add another 140 million households by 2030, which is going to have an annual income of more than 5,000 or within 5,000 to $10,000. And very interestingly, out of all these additions, about 90 million households by 2030 will be headed by millennials who would have, sort of born in the liberalized India, if you will. So on the demand side, we are seeing that this is really driving the experience consumption story. In terms of just sort of looking at the per capita inflection point, if you will, as compared to the rest of the world. And $5,000 for travel, all segments of travel, for little luxury travel or little premium travel, it's more than $10,000. But otherwise, for all kinds of travels, including visiting families or, sort of trade-related travel, etc., is more than $5,000 is the inflection point, as we've sort of seen compared to the many other emerging markets as well. So now coming to and this trend is, by the way, going to continue for some time. And I was just listening to the conversation earlier and saw some of the comments, that Nikunj was making in summary, that the demand is going to grow at about 10%, supply might be little short and all, but this demand is only going on the back of this really, sort of consumer cohorts, if you will. Now coming to the trends, to your specific question, let me tell you just first that all segments are rising, like literally for the last couple of years. And I see that that is going to continue for some time. That it is not about now there is pent up on a particular segment and then the other segment is not doing well.
Fair point.
We've seen this business travel coming back. We've seen trade related travel coming back. We've seen leisure travel going through the roof. We've seen specifically Dekho Apna Desh sort of
Right.
concept picking up in a big way. We've seen spiritual travel coming
Right.
up in a way, and we should talk more about that as well. But we're seeing across the segments, the travel is
Right.
there.
So
In
I'm
terms
just
of-
going to take a leap from that and just point a very simple thing for our viewers here is that you look at India's per capita. We are nowhere close to what other developed markets are. And typically when you move from 1,000 to 2,000, but 2,000 to 5,000, there is going to be a binge in terms of discretionary spend. And this is something which I think is giving optimism to Mr. Chhatwal and Yezdi that India will grow, per capita will grow, disposable income will grow, and that in a sense is going to be one of the factors. If you look at and I'll come to you also, sir, on this one. If you look at the Indian consumption basket, a large part still goes in food, a large part still goes in real estate, a large part still goes in apparel, and very little goes in travel. Do you see fundamentally changing?
So the trend is is definitely in that direction. And to give you an example, we have work from home right now.
You still work from home.
We have concept.
Wow.
That concept's not gone yet. So it's there.
So we've really convinced you to come to the studio today. So the work from studio today.
So it's not as if everyone's coming into their home cities and everyone's coming into office as such. It's somewhere it's on the path. And simultaneously, you're also seeing a small trend of travel and work together. So you're seeing those aspects coming in. So as a result, the hospitality also has to cater to those pieces in that sense.
Work from home, you can work and you can travel. Wow, man. I mean, KPMG really should be the company of the year or something in terms of employment, right?
Let me meet him post the interview on the side.
My question to you is that while everything is looking good, but what about talent? What about wage inflation? I mean, I hate to bring this in middle of a great conversation, but when we've seen a real boom time coming in any industry, it goes through what could be called as a serious wage inflation crisis. And could that be the biggest challenge for you? Because while it's aspirational and inspirational to be a doctor engineer in India, where do you feel really want to join the hospitality industry in that regard? You'll appreciate the spirit of my question.
Yes, sure. I think there are a lot of schemes that both the government at center, state level, us as large organizations have put into place. For example, we have committed to skill 100,000 people by 2030 together with CII. Now, we don't need 100,000. So we're doing it really for the sector and as a service to the sector. That's one part of the equation. The second is how do you grow people from within? See, the digital will also make certain jobs much easier that you don't need so many people. So you need to reskill people to do newer kind of jobs. The bigger problem that nobody is seeing, which I personally see, and I'm happy to share it with you, is the higher you grow up in that ladder of economies, the lower will be the willingness to serve. Our sector is all about service. And the richer you grow, the more you want to enjoy the service rather to do the service. I think something which anybody who travels to the West immediately senses that there is a big difference in the service levels that you get in Asia in general and India in particular versus on the Western side. So I think how we manage that as we leapfrog towards number 3 economy in the world is far more important than to get constrained by the wages, because the more the wages increase in a nominal way and the more the people earn, the spend is going to come back to our restaurants. into our hotel. So that's not the
The
issue.
willingness to serve,
Willingness to serve.
that's
So
a big
we'll
issue.
have to wrap
And the willingness to work on Christmas, New Year, Diwali,
Every celebration, yeah.
It's not the most interesting thing for the people in the properties. It's very interesting for people to go in the hotels and enjoy that.
No, that's that's the good and the bad, the ugly or the true picture of the hospitality industry. That it's always a industry which is heavily dependent on service, attitude, and Taj in a sense has always ensured that the Tajness takes care of this entire spirit, so to speak. So it's fantastic. And even when tomato prices go up by 100 rupees. They make sure that the tomato is
There's
not
enough
missing in the
tomato
salad.
in the salad.
When onion prices they go up, there is enough and more onion when it comes to the food delicacy there. So I'm going to just wrap it up with one final word from you, Mr. Chhatwal. You've told what customers should expect from Indian Hotel as a brand, but what should shareholders expect in this decade?
What I've consistently said since we guided on Aspiration 2022 or Avant 2025.
You're not the CEO chair, occupying the CEO chair. As a guest editor, you can
I
stretch
think
a bit more.
Okay, that's right. As a guest editor, anybody who's making any promises should be able to walk the talk. Okay. And ideally do a little bit of over-deliver and under-promise instead of over-promise and under-deliver.
So as of now, what you've committed in terms of the management growth, the revenue growth, the threshold of margins 30% plus, and the number of room addition, you think we should be in for a positive surprise for next 2 to 3 years?
So if you allow me now to wear Indian Hotels hat, the guest editor, yes, we promise, we deliver.
Closing comments from you.
So I think it's very interesting times, the decade that I'm talking about, and it's going to be a good challenge of interdependencies, because this sector is not just this sector on its own. It's dependent on infrastructure, it's dependent on service, it's dependent on economy, spend, all of those pieces. So it's interesting to see how this is going to evolve.
Okay, with that, we'll wrap up this conversation. I'm Yezdi, as well as Rajesh, as well as Harsh. Thank you so much for making time and speaking with us. And a special thanks, of course, to Mr. Chhatwal for coming down and being a guest editor for the day. A lot of insights today that we've got. The biggest headline, of course, being that the demand is expected to be around 17 to 18% CAGR for the next few years, but the supply is only going to be high single digit. And there's a lot of influx of innovation in the entire system. And that means that the tier 2, tier 3 cities are going to get more hotels, and spirituality and wellness travel is also picking up. With that, we'll wrap up this conversation. Thanks all to our guests again. But slipping into a very short break, don't go anywhere. Market is a bit dizzy. We'll address that when we come back.
That you can